Welcome to beautiful downtown Long Beach, my hometown. We're here at the 2022 KJLH Women's Health Expo. I'm Stewart, CEO of Stewart Insurance Services. And in just a few moments, we'll be starting our breakout session on generational wealth. So come on in, welcome, and join us. Welcome, ladies, to Generational Wealth. Thank you for joining me today. I don't know if you heard me on the radio or anything. Sometimes I'm on, you did? Sometimes I'm on Andre Russell's show on Sundays, and I give a little overview about what we're doing over at Stewart Insurance Services. And I'm so happy to be here to give you guys the information. I know in our community, we don't know a lot of times about what coverage we can get. We think because we may have certain illnesses that it's not possible, but that's not true. I'm here today investing in my community to get the information out. So I'm just excited and proud to be here. This is my first Women's Health Expo, and I'm from Long Beach. I'm a native, I'm born and raised here. I went to Long Beach Polytechnic High School. Any of you guys went to Long Beach Poly? I also went to Cal State Long Beach. I got my bachelor's degree in information systems, and I got an MBA. So I'm glad to be here. You guys look beautiful. Thank you for coming. So a little bit about my why. Why am I here? So my background. My parents have been married almost 50 years. And you know, sometimes when people are together, they love each other, but it doesn't work out. And sad to say, my parents, you know, ended up divorcing. And when they did divorce, no life insurance, and my father transitioned. So that takes my mother off the hook. She's no longer married to him, and that puts me on. So now I had to step in and do my father's funeral services. So my why is I'm here to help people prevent having to do GoFundMes, donations, and fundraisers when we can prepare now for life's unexpected and get life insurance policy. So that's my why. I had to take care of my father's funeral out of my own expenses, and I wasn't looking to do that, and that was devastating. I couldn't grieve the way I wanted to because I had to take care of that. Okay, so I'm Stewart Insurance Services. We're a licensed independent insurance agency. We're accredited by the Better Business Bureau. We have 99 carriers, not just one. We have the big players: Mutual Omaha, American National, National Life Group. We provide free quotes, no credit check, no obligation, and we cover anyone regardless of existing health conditions such as stroke, cancer, heart attack, HIV. We cover individuals. The coverage that we have is whole and permanent protection, whole life. We have disability, we have universal life, we have annuities, and we have disability. Our services include free quotes, consultations. We also offer an entrepreneurship program where you can start your own home-based business. We do business training and mentoring. This program is proven. I went through it myself. It's structured. It has a roadmap with the steps that you go through to get licensed, and you can do that in like 4 to 6 weeks. My mission is to be here to change lives, to provide the information so that you know how to use life insurance products not only for a death benefit for your family, but to also use it for the living benefits to pay off debt. A lot of people don't know that it has multi-purpose, so that's why I'm here. And that's my objective, to show you how to use a policy to fix debt and leave wealth to your family. So who knows what generational wealth is? Does anybody really know what that is? What is it? You, miss.
Generation is I will build the wealth and pass it on.
Correct.
Passed on from generation to generation.
Absolutely, absolutely. You, ma'am? Same thing? So, yes, you're all right. Generational wealth is anything of value that you pass on to your family. It could be property, it could be an expensive car, it could be the benefit from your life insurance. All of this is an asset that you leave for generational wealth. And so it's something tangible that we can measure, that our family can have, that can take care of them. And you have to start planting those seeds early. The only thing we fail to do is plan a lot. And when we fail to plan, that causes problems later on, and stress and frustration on the family, because now you've transitioned and there's no money there to take care of these expenses. So let me tell you about whole life insurance. Do you all know about whole life permanent? Let me tell you about it. Whole life is permanent protection. It'll take care of you the rest of your life. It has cash value on it. So every month when you make a monthly premium payment, a portion of that payment goes into a cash bucket and the other portion goes into a coverage bucket. The carrier's responsibility is to distribute your premium accordingly in the right buckets so that if you transition, the money is there to pay the family. And then life insurance is about living benefits and death benefits. So if you have a whole life permanent protection, every time you make that monthly premium, you're growing a cash bucket. And so while you're living, you're able to pull a loan from that policy and you can pay off debt. So a lot of people don't know that and also leave a death benefit. Now there's term insurance as well. Term is nothing but temporary. Just think term, temporary. So for example, if you're 40 years old, you take out a 10-year term policy. If you don't transition by the time you're 50, the policy expires and the insurance company washes their hands. They don't owe you anything. There's no cash value to it while you're living, so you can't take any money from it when you're having hard times and be able to pay off debt. You can only do that with whole life permanent protection. So that's how that works. Insurance is from ages 0 to 85. Once you turn 86, no carrier in the country will pick you up. You must have that plan and be enrolled in it and be active with the premiums paid. If you're 85 and it expires, you don't have any coverage. You have to make sure that that's there. Now, with life insurance, there's 3 roles. There's an owner, there's a payer, and there's the insured. The owner has the most power on the policy because they're the only one that can pull the cash value. They're the only one that can say who gets the money when you transition, which is known as the beneficiary. So the owner, even if somebody else is the payer making the payments, they don't have the power. You can make all the payments you want to as a payer, but you can't pull any money off the policy. Only the owner can. So make sure you're the owner if you try and set up your policy. Now, with debt, you have final expenses. When you hear that term final expenses, they're talking about when you transition, your medical bills, credit card bills, mortgage payments, any bills that you leave to your family when you transition is known as final expenses. And you need money to leave to the family for those final expenses. And this is why you have your life insurance, so that if something happens, you already know things are positioned. You live life comfortable and worry-free, that if I transition, I know that my family's going to be okay. They're going to get a death benefit and be able to pay these bills and not have to do a GoFundMe or be on the street corner, trying to get this money together for a service. So this is what we need life insurance for. Then you have debt like for your personal bills. Maybe you owe Pennies, maybe you owe Macy's, maybe you owe Target. You can use your cash value to pay the debt. Now, let's say, for example, you owe Pennies $500, J.C. Penney's $500. Your goal is to keep your credit report right so that you can have better consumer buying power. So how do you do that? So you have a life insurance policy. You've been paying on it a couple years. You looked at your cash value. You're like, ooh, I got a nice little nest egg. I got about $2,000 in there. You could have more than that. I'm just going to use that example. You pulled your credit report. You're like, I need to pay off these bills. I need my FICO score to go up to 700 or 800 so I can get these low interest rates and stop buying things and paying for them 2 and 3 times, right? So you got your life insurance policy and you have your credit. You see on there you can pay off J.C. Penney's $500 balance. You look on your life insurance and you have $1,000. Well, I'm going to go get a loan from my life insurance for $500 and I'm going to pay off that bill. When you get a loan from your life insurance, it does not hit your credit report. See, a lot of people don't know that, and they go to the credit union and the bank and get a loan and say, I'm going to pay these people off, and that creditor hits your credit report. So now, yeah, you paid off J.C. Penney's, and in a couple of months it's going to fall off. But guess who else is still on there? The credit union, Bank of America, because you took a loan to pay off Penney's. No, we go to the life insurance to get the vacation. We go to the life insurance to buy the car. We go to the life insurance to get the down payment for the house. We go to the life insurance to pay our kids' college tuition. None of that is hitting the credit report. You want to know how people out here get rich, buying things, and you're like, ooh, their FICO score is high. They're just consumer buying power. They go get what they want. That's why, because they invested and got themselves a life insurance policy that has living benefits and death benefits. So they're just having a good time in life, knowing that they can sleep comfortable, that if they transition tomorrow, there's a death benefit left to the family. And while they're living, they're still living it up because they can go there and pull, you're borrowing against your own money. It's not the carrier's money. You're making a premium payment every month, and that nest egg is accumulating, and you can pull from it. Okay, and get that FICO score up, get that debt ratio down, and now when you're going to buy stuff, your interest rate is low. Now you out there like the big players are doing it, going to, I want that one in the corner and pull that one out, and I like that house, right? Yeah, that's what you want, that consumer buying power. And I want to buy it one time. I want my interest rate low. I want to buy it one time. I don't want to buy it 2 and 3 times. And that's what keeps you in debt. And then when you ask someone to talk to you, a lot of people, they'll say, I don't have it. You do have it. It's in the debt. The banks are getting it. And when your FICO score is low and your debt ratio is high, they give you that high interest rate. Why? To keep you in debt longer. And when you make that payment, hardly none goes to the principal balance because the interest rate, they take it all. So you forever in debt. And you forever, when you need to go get something, now all this debt is causing my FICO score to go down, and I just can't seem to see clear of it. How do other people do that? With life insurance. Because they're going to the living benefit, getting the cash, pulling it off. It doesn't hit the credit report. So their FICO's still up, debt ratio down. There's no taxes. You don't pay any taxes on that money. Okay, it's tax-free. And you don't have to have a credit check. You don't have to have a qualifying reason to get the loan. You just call up the carrier, tell them you want a loan on the cash value, and it's yours. You're going to get the check, period. That's how it works. And this is how other communities get generational wealth, because they planted those seeds early, and now they're harvesting the life. Okay, that's how it works. So the goal is to get that down with life insurance. And like I said, my mission here is to let you know how to use these products so you can have financial freedom. That's the whole thing about it, low FICO scores. I'm not a debt consultant or a credit repair person, but I've lived a little in my 55 years. Okay, I didn't grow up with a silver spoon in my mouth, but I had good parents. They did the best by me. They were entrepreneurs as well in their part-time, so I was able to watch my parents and what they do. My father is deceased now. My mom is ill in a nursing home. She has dementia, and I'm her power of attorney. I take care of my family's estate now, and I do this on the side, and I'm here trying to help individuals understand how they can get things positioned for their family. So what happens when you pay off that credit report and now you got a 750, 800 FICO score? You out of debt. You paid all your credit cards off. What you going to do now? You know what you're going to do? You're going to take that money and invest it back in the life insurance policy and up your coverage. If you have $50,000 policy, get you a $100,000 policy. Put the money back in there. Don't go back and, get your credit report all messed up, because that's going to take you away from that buying power that you want. So that's the one thing you don't want to do. And another big secret people don't tell you, when it comes to your credit and you have a credit card, don't go over 50% of the credit limit. If the credit limit is $1,000, don't go over $500. That's when the score goes down on the credit. And then when the creditors see you went over your credit limit and at your limit, they look at it like, oh, that person's doing bad. They're high risk. You come apply for something and you need financing. Yeah, I'm going to give it to you, but I'm going to give it to you with a high interest rate because your cards is maxed out. So how do we get those cards maxed out? Life insurance, make our premiums. We planting seeds for the future, and we also taking care of things while we're living with that one product. And that's what you want to do. You want to know how the other communities do it? That's how they do it. That's how they turn their money over 2 and 3 times in the community, because they know where the resources are to get the money and how to do it. And we need more people to let our community know how to do this. That's why I'm here again. So again, that cash value is very valuable. So when it's paid off, you want to go and invest back in your life insurance policy. So let me see what else I would like to talk to you about. So you guys can see planting seeds now is going to help you harvest later money for your family. So with that, I want to get into the entrepreneurship part. So At Stewart Insurance Services, we have a roadmap. Come on in, ladies. Thank you for joining us. Come on in. You're not too late. So we're just getting ready to go into the entrepreneur part. Is my mic still on? You can hear me? Okay. So we covered, ladies, a little bit about permanent insurance and term insurance. And just right quick, ladies, is okay? Give them a tiny recap. We talked about permanent insurance, which is whole life, and it'll take care of you the rest of your life. And if you want to take a loan against your whole life protection, you can, and you can pay off your debt on your credit card, and it does not hit your credit report. The goal here is to use life insurance not only for a death benefit, but for a living benefit. I want everybody to know when it comes time to pay off your bills, you want to be doing that with your life insurance because you want to get that credit report clean. And you don't want to keep these creditors on there. And the only way to do it is, you can do it other ways, but life insurance is the best way to do it. And I was telling them as well about term is temporary. If you have a 10-year term policy, you're 40 years old today, and you turn 50 years old in 10 years, if you have not passed or transitioned, the policy expires. So if you're looking for something not to expire that can help you out while you're living, you need a permanent whole life protection, okay? Now, that catches you up to where we are now. We're talking about the entrepreneurship opportunity. So at Stewart Insurance Services, we have a roadmap that's proven and structured. It has all the steps you have to get your license in California. In California, you need 20 hours of life and 12 hours of California ethics, 32 hours. You can do this on your phone, tablet, laptop, and you can do your pre-licensing studying. We give a 50% discount on your studying, and we have the carrier that you're going to study with. You do that as self-paced. People have done it as quick as 4 weeks and got their business started up. You can do this from your home and have an additional stream of income. You don't need to have a college degree. You don't need to have a car. You just need to have a Wi-Fi and an iPad. And you're able to go ahead and service clients, give them quoting, and enroll them in plans and work with the carrier's underwriters. You don't need fancy clothes. You don't need any of that. In fact, you could be working in your robe and nobody would even really know because it's telephone enrollment since the pandemic has started. I'm not saying I do that, but I'm just saying you don't have to have fancy clothes. And you don't have to get dressed at home. You can be yourself, and anyone can accomplish it. I did it. You guys can do it. Never mind that I have these college degrees. Probably if I could go back and somebody introduced me to the industry, I might have chopped off one of those credentials behind my name because I see it's not always the college degrees that give us wealth. I learned that as well. So I've never been a big boaster about I have all these degrees because that doesn't mean that you're going to have the best job. It doesn't mean that you're going to get over because you have them. So my head is not lost because I have those degrees. You don't need that for this, okay? Turn to your neighbor and say, it's my time. It's my time. Yes, right. It's your time, ladies. It is your time to be entrepreneurs, be your own boss. How about that? Making your own hours. How about that? Planting seeds so that you can build wealth in a business and leave it to your family. How about being able to make your own hours and service people when you need to and make appointments with them? How about making commission checks for every plan that you close, $500 to $1,000 on every policy that you close and getting that in your account 2-3 days later after you close the policy with the client? That sound bad? Yes, right. It has low startup fees. You don't, like I said, you don't need a lot of things to go ahead and get your home-based business started. What you need to be is 18 years and over. You need to have the pre-licensing training. Like I said, it's self-paced. Okay, we give the discount and we provide the carrier for the training. When you join our team, you will be able to have a portal that you log into. Everything is compiled into the portal. You'll be able to have weekly team meetings. You'll be able to meet with other professional agents like myself and ask questions. We have a Facebook group as well that you can join and engage other individuals. So you're not left alone. You have other people you can engage. Like I said, the commission is 50 to 60%, and it's associate producer when you start, associate agent. And after you close 7 policies, you're promoted to senior agent. And that's how your commission goes up higher. You would be contracted with 99 carriers: Mutual Omaha, American National, National Life Group, Americo, the list goes on. Those are some of my favorite ones. But yes, you'll be contracted. This will be your own business. In the financial services industry, it's called an upline. You join my team, you will be joining my upline, but you are not a part of Stewart Insurance Services. You're going to have your own business, ladies. You're going to pay that $35 with the LA County Register Recorder, and you're going to record your own business. You're going to be your own boss. This is yours, not mine. The only thing I would offer you is the ability to be contracted with the same carriers that I have, which is 100 of them. Other than that, you wouldn't be speaking on Stewart Insurance Services, you'd be speaking on your own business. And like I said, you come up under umbrella just so you can be brought to the table. That's how it is in the financial services industry. Someone has to bring you to the table to get contracted with all those carriers. I'm under someone else's upline that brought me to the table, and I've never regretted it 1 minute. It has really given me financial security, financial freedom. I don't worry about anything. I know that if my children need anything, I have a source to go. You don't have to quit your jobs. If you close 1 policy a day, that's a $100,000 annual salary. 1 policy a day, okay? You can make a lot of money in this industry. It's lucrative. When all the other industries are folding, throwing in the white towel, closing, the insurance industry is still thriving. Because unfortunately, I hate to say it, forgive me, Lord, but we all gonna transition one day. So this business is here to stay, okay? And you'll be able to service and give back to your community and help educate them on financial literacy and about the products available so they can get their children insured while they're young, like the other communities do. Let that money grow, have something there for them so that they can have a start in life, whether they want to buy a home, whether they want to go to college, whatever they want to do. You don't have to feel stressed when they turn 18. What am I going to do? I'm going to my life insurance policy. That's what I'm going to do, and I'm going to take care of those things that I need, that I can't do from my 9 to 5. And like I said, you do not have to quit your job for this. You can do this in your spare time. So I think that might be all I wanted to cover about the life insurance. Did anybody, let's go into the question and answers. Does anybody have any questions in particular, starting with life insurance? What about whole life? Does everyone understand that? Or are there any questions that you need? Yes.
Okay, with the whole life, when you take out a loan, when you take out that loan, is that loan deducted? Say, for instance, you have a $50,000 policy.
Mm-hmm.
You take out a $1,000 loan.
Uh-huh.
Is $1,000 deducted from your policy?
Absolutely, it is, ma'am.
So it will become $49,000 now?
That's right. That's an excellent question. Thank you so much for presenting that to the group. When you take a loan against your life insurance policy, say your policy was $10,000 policy. You're like, I need the money. I'm going to go and get it. You go take the money out of there, it reduces the face value. So if it was $10,000, you took $1,000, it's going to be $9,000. Now, understand that in life insurance, it's loan and withdrawals. 2 different things. Got to be careful when you go to the carrier asking about that. Now, if you do a loan, your intention is to pay it back because you want it to go back to the face value. If you do a withdrawal, that means I'm not planning to pay that back. I'm keeping that. And so that's going to reduce the face value. Say you do a partial withdrawal. You say, I got a $10,000 policy and I got $5,000 cash value. And I'm going to do a partial withdrawal, not a loan. I'm not paying it back. I want the $5,000. I'm not paying it back. Okay, you don't have to. But your face value that's left to your family is $5,000. Okay? And you don't have to if you do a withdrawal. But you can put it back. You can. Yep, you can.
How do they work it out to where you get to pay it back within a year? Is it like, if I pay $20 a month, that's going to be $30 a month until the $1,000 is paid back?
You're going to work out those payments with the carrier with a low interest rate, like 3 to 5%. And you know the banks don't want to give you that because they know that they're not making any money. And that goes back to what I was saying about debt. Don't let people charge you all that money if you can. If you find a way that you can get a better interest rate, that all ties to credit report and FICO score. So I said, I got to get out here and show the community how they can pay that debt down using life insurance, you know, because that's what it's all about. But yes, to answer your question, you can pay back. Yes.
Okay, so you said when you're paying on your life insurance policy, the money's going into two buckets.
Mm-hmm.
What's the difference between these? What's the point of that?
The point of it is because it's a contract. It's a legal binding contract between yourself and the carrier. When you sign that policy and say you want it, their obligation is, I make my premium, you cover me. That's an agreement. That's a contract. And so the purpose is when I make that premium, I'm expecting you as a carrier to allocate my premium in the right buckets. Because if I transition, I need you to pay my family. So if they put it all in a cash bucket, there won't be any in the coverage bucket. Their job is to distribute it accordingly so that the monies are where they need to be when you need them. Like I said, life insurance is about living benefits and death benefits. So as a living benefit, they need to put a portion of that premium in that cash bucket. So if you ever want to come and get it, it needs to be there for you. That's the purpose.
I'm sorry.
That's okay.
All right. So say I have that money in that cash bucket. That's the money that I can draw from if I want to go and take some money out?
That's right.
How about if I never take that money out? Then everything goes...
I love it. I love your question because you're making me remember all the things I want to tell you. Yeah, if you transition and you don't use that cash value, it does not go to the family. Only the death benefit, the face value.
50,000, yep, right? So that's why it's better to use it. I would see what
To
you're
pay
saying.
off debt and stuff. That's why I want to let people know. It'll go with you to your grave. The carrier's going to keep that money. Your family won't get that. It's a living benefit.
Oh, you gotta be while you living.
It's a living benefit.
Okay.
Yeah. Yes, ma'am.
Okay, they got the cash bucket, the death bucket.
Uh-huh.
Okay, so if you don't touch it, the family doesn't get it.
Correct.
But if you do, it's deducted from the death benefit.
That's right, depending on, correct. Either way, withdrawal or loan, it's going to reduce the face value, the death benefit. Correct.
But if you don't touch it, it doesn't make a difference.
Doesn't make a difference. It's just going to keep on growing and growing and growing. And when you get your life insurance, it'll show you from the age that it was issued how the cash grows. And that's how you're able to say, let me see what's going on here. At such and such age, I'll be able to pay this off. I'm just going to keep paying, and I'm going to wait a couple years. I see where the cash is going to be. I'll pull my credit report and see what's going on, and I'll be able to pay some of that off. Keep people off your credit report. Be able to go out there and buy whatever you want, get those low interest rates, right? That's what we want to do. We don't want to be giving all our money away. And you do have money. It's in the debt. And the financial institutions keep you in debt a long time when the FICO score is bad and make that money. And you're like, I just can't seem to, keep my head above water. That's how they want to do it. So you got to be able to find a way to get that FICO down so you can go out there and do whatever you want to do and pay for it one time. Sometimes these interest rates so high, you look up and you paid for the thing 2 or 3 times, right?
Yes.
Can I help? Yes.
Some for life insurance, like for a young family, let's say there's a stay-at-home mom, 2 or 3 small kids, and the other partner is the sole provider. Is it a general rule of thumb to multiply that yearly income of the sole provider by 7 for life insurance, or is there like a formulaic, or is this really what people want? Or do you encourage people to get like 7 times their annual income?
Yeah, something like that. You need to make sure you have enough to cover your expenses. Life insurance is look at your bills and say, how much am I going to need to leave the family? Are you looking to have a fancy funeral? You're looking to have all of that? You're looking to see that to have generational wealth, you have to plant those seeds. So if you want the family to keep that house, you have to make a way for them. Okay? It's more than just getting a power of attorney and being able to put the home in trust. That's a whole nother ball game, so you don't have probate court. But it's another thing for if the house is not paid for and you want to leave it as generational wealth and your family be able to pay it. They're like, I already got all my bills. I want to keep grandma's house, but I can't make the mortgage payment. So that's where the mortgage protection comes in for that. But yes.
So let me ask you, since we're here at this Black Women's Health Expo, we're dealing with our target audience. How do you break through? Because I think a lot of times for certain communities, right? Because we know for a fact that generational wealth is built through insurance with other communities. Like that's just a given. That when their kids are born, they buy insurance
That's
for
right.
their children.
We're a little late, but
So for us, a lot of times I think are very leery of insurance. Oh, someone's trying to kill me. You know, how do
Yep.
you've been in the industry for a while. What would you suggest as far as like getting and targeting our audience, like breaking through that to expose the need for this? It's a tool that we need.
Yeah, that investing in our community, and that's exactly why I'm here. I think I place emphasis all the time. I get that too. A lot of people will get a coverage with me, and I'm saying, make sure you let your family know. And what they say, I'm not telling my family. You don't know my family? Ooh, I'm not telling them nothing. And I'm like, you need to. They need to know that you have a policy. Okay? I do a lot of emphasizing on that GoFundMe.
It's so embarrassing. I mean, we need to stop. I mean, like, it'd be nice to not have that world, but I mean, you'd be surprised. Entertainers are having GoFundMe.
Oh yeah, because they and that's because.
I don't know who he was, but that Samuel Richards.
Don't let him speak his
Yeah,
name
I
in
know.
space.
Yeah, that's-
Say it again.
Yeah.
Don't speak his name in this space.
That's what I'm saying,
About
but I'm just saying.
But there was a comedian who I think had a GoFundMe, but you think, like, where's their financial planning when they're, 20, 30 years in this business? I'm not just using an entertainer.
No, I get you.
But
Yes.
what I'm saying is that we should go beyond car washes.
Yep, donations, fundraisers. That's because they didn't do what Oprah said, sign your own checks. No, I sign all mine. I don't care if I'm up to 2, 3 o'clock in the morning. I'm going to be checking mine because I've seen a lot of people that could have done much better if they would have managed their finances. Sometimes people lose it and just think they're all that and then let other people sign the checks and you look up, you broke. You have nobody to blame but yourself. Yes.
Well, one of the things is, a lot of times people are not able to really do their generational wealth until they get older. That's when their income starts to be steady.
Yes.
When they're younger, they're still trying to provide so much for their kids and everything that they don't have that extra money.
Right.
But then they're putting all those other things that they require. Your health has to be a certain thing, this has to be, and you don't qualify all those things because black people have certain types of
That's right.
comorbidities that by the time they get to that advanced age where they can have that money, they don't qualify for those policies.
Right.
So what do they do at that point? All they can do is what their house has value or whatever they can take out of their house
So-
that they've saved. And usually it's not a lot at that point if it's not some type of retirement, something like that. So what do you advise them to do if they got?
I advise them to contact me because I have a carrier that covers regardless of existing health coverages. Whatever your conditions are, we can get you covered. So that's why I'm here as well, to let people know that. A lot of people are saying the same thing you're saying. I've been declined a million times because of my illness, stroke, heart attack, lupus, what have you, HIV, and they've been denied. Okay, I have a carrier that will cover regardless of health conditions, no physical. And what do I say to people when they get older? When you get 50, you start and you're concerned, you can get a final expense policy. It's a form of life insurance, but its purpose is only for really medical bills. I want a final expense, I'm older, I just need to leave something. You get that. And it covers the medical bills, credit cards, and all of that. There's a 2-year wait on final expense policies. So if you took one out today, you have to wait 2 years before it would pay. But yeah, on the final expense, and it's the
Unfortunately, you don't have a choice of whether you're going to die or not.
exactly.
They don't tell you that. Wait,
Huh?
after you pass away on a final expense, because I had this one called affordable plan. So you mean, wait, after you pass away?
No. When you get the say you got a final expense policy today,
Okay, yes.
you have to wait 2 years before it would pay, for it to pay the family.
So what happens if you die before then? You get all that money back? Or
If you go with one of my carriers, they give you 100% of the coverage back if you die before that. So it depends on the carrier and what they offer. So there's a lot of different life insurance products. You got final expense, whole term, annuities, universal life. Depends on what you want to do. It's there. It's just that we got to invest in it. That's what the other communities are doing. And they got all this consumer buying power, and we got these high interest rates trying to figure out how come we can't buy all that. How come, Say it again.
policies based on your ethnicity or the-
Accident.
Okay.
Just real quick.
Ooh,
accident,
I got it.
Just really quick.
Sure.
I took my accident away. I had accident, but they telling me don't do accident because one thing with accident, accident insurance.
Sure.
You have to prove it, and they said it's very hard to prove. Say for instance, you was in a car accident. So the car hit me.
Yes.
But I really didn't die because the car hit me. I died because they'll say she died because her breath. So they say you got to be careful. So I got rid of my accident. They said because it's hard to get accident coverage.
So with the accident, one good thing that you'll get out of it that you don't have hard to prove is when you do your well woman exams, you do your dental x-rays and cleanings, the maintenance stuff, they'll pay that. If you had surgery, that's always provable by getting the medical records, okay? If you had follow-up treatments, physical therapy, all of that, you can claim that on your accident policy. It pays for those type of things, MRIs, lab work, the PT, OT, the surgery.
I'm talking about when you die, just like accidental coverage. Not, I know those.
Okay, you're talking about on the life insurance policy. What's on the death certificate? That's the way the carrier
That's what
pays.
I'm saying. So they say you gotta be careful with accident because even though I could have had an accident, I have to show that I died because of the accident because the toe was amputated. So they said be careful with that accident because it gets very they really don't want to pay for it.
Yeah, because the way it works is natural and accidental. So natural on a life insurance policy, if you transition from natural causes, old age, a sickness, a disease, or some type of illness, the carrier will pay under natural. The only way you're going to get accidental, say it's a $5,000 natural, $10,000 accidental. The only way you're going to get the accidental is if the death certificate says something that you died from a plane, a car, or a bus. It has to say that on the death certificate, or the carrier is not going to double the policy and pay you out, even if you have that accidental rider on there. They're going to pay under the natural, which is the $5,000. You wouldn't get the $10,000. So the death certificate is very important. Any other questions? Hi, ma'am. Thank you for joining us. We're almost done. Yes.
So I think from all of this that it sounds like whole life is probably like the
Yes.
better policy, just in general, as far as flexibility to be able to move your life as you're
Right.
growing and whatever may happen. So
Yes. I mean, we all come on hard times sometime, and we want something to go to, and that whole life will have that little nest egg for you to pull from it. Low interest rate.
as I always understood, the insurance you pay into, you're paying into it. Once you die, that you have that gets it. So thank you for teaching me.
Yeah. Our website is www.stewartinsuranceservices.com. Ms. Tolliver, would you be so kind to help me with the bags with the ladies? Ladies, we're going to give you all a bag. On the inside has some really nice lady things we like to have. I'm Shonda Stewart. In your bags, you're going to have a magnet, which is a card, and it has my Instagram, Facebook, website, my business line. It's www.stewartinsuranceservices.com. You can go to my website and you can book an appointment. There's an appointment link there, and you can schedule with me. I do free quotes and free consultations. Yes.
Does the policy move with, if I left California, would it go with me?
Absolutely. Yes, yes. It doesn't matter where you move. You just want to let your carrier know that your address changed. Yeah, but anywhere in the United States. And we're licensed nationwide, not just in California. We cover people all over the country. In these last couple of years, I've been helping people all over the nation get coverage that had health issues. I've been focusing on that and let people know just because you're ill, that doesn't mean you can't get life insurance. Yes, you can. You got to have the right agent to have the right carrier to help you. Yes, ma'am.
Okay, so you said the program to be licensed.
Yes.
That would, but if we go into that program, that would just be licensed for California, though, right?
To start, that would be your resident license. And after you, guess what? After you get your resident license, you can get licensed in every state in the country and not have to take the test anymore. You take the test one time in California as a resident, okay? And once you do that, you can go to whatever state. There's a particular site for licensed agents to go to when they want to grow their business and they want to do different states. And whatever that state fee, they might say is $65, and you pay them the $65. They see that you have a California resident license, they'll give you a license. Illinois, anywhere. Vegas, Nevada. Yeah, we're licensed all over the country. I said, and I'm from Long Beach. I'm a native here. And when I heard about the expos here, they asked me to come here and present to you ladies. So I'm so excited to be here and to be in my hometown, to be able to come back and see you all. You all look beautiful. I really appreciate you guys coming out. I hope I've been informative.
Thank you.
Yes, yes. I want to encourage you ladies to be your own boss. Don't be discouraged. Don't think you can't do this. You can do this. You can start another stream of income at home and start planting those seeds and be able to earn a commission. It'd be nice to get $500 or $100 or $1,000 in your account after a couple of days and just spend an hour with a client. You have an iPad and you'll be quoting the pricing to them for different products. They select what they like. You complete the application, and within an hour, you will have submitted that work to the carrier without leaving your home. All you need is internet access and an iPad. Get done with that. They get coverage. Their first premium, then you'll be able to have your commission deposited. Nothing to do with me. The only thing, you would be coming under my upline so that you can be contracted with all the carriers. You would be owning your own business. This is a proven business model, okay? You can live life limitless, okay? Have financial freedom. I'm Shonda Stewart. Thank you guys for coming today. Thank you. Feel free to, in the back, there's a QR code on the tabletop sign. You can always scan it. It takes you to my website. There's a link that says join my team. You click it and it'll take you so you can join it. Okay, if you want to make an appointment with me, you can. I'll spend time with you and give you a consult and sit down and talk about the steps in the roadmap, what you need to do. First step is to sign up, and then after you do that, you want to get your pre-licensing going. Like I said, you could be on a lunch hour, and for an hour, you could have your phone, and you're just going through your pre-licensing training. And when you get done with it, then you go take your state of California exam, and then you're in the game. Now we're ready to put you with the carriers, and you go ahead and start your business. So ladies, I want to encourage you. Give me a call if you need coverage. The quotes are free. I have a lot of carriers. We work with your budget. If you say I can only afford $50 a month, I work with you to get those numbers right so you can afford it, because the goal is for you to keep the policy. If you're going to get a policy and you can't afford the premium, it doesn't make sense. It doesn't make sense. You got to stay within your budget. You can't plant seeds when you're not in your budget. It's not going to work out. Thank you.